Good day. I'm Eddie and I'm the author of Trend is Friend. The date today is the 25th of October 2022 and the day is Tuesday. The time is 12:43 p.m. It is just after the first morning session of the KLSE Busa. They are stopping for the lunch rest. I welcome you to Buy Rationale. Buy Rationale now provides 13 reasons instead of 10 when considering a particular stock. Disclaimer though, whatever is shared here is basically for information and education. Should you take any action, you will be on your own and you must consult a financial planner or a broker. The stock in focus today is the Sonic, stock code 5216. Uh, and the Sonic is not in my pick list yesterday. Actually, the pick list that came out here was Mbright, but since Mbright is a penny stock, 10 cent, I have decided to pick the Sonic instead, even though it's not in my pick list. But this is, I feel, the best option for the day. Okay, the best pick criteria is based on price gain, uptrend momentum, of which the price is above the cloud and above the MA 200. So it shows some trend and momentum. It has relative good volume of greater than one, meaning the volume traded this morning is higher than the average of 90 days. And it is a profitable net cash company. Based on this criteria, Datasonic is chosen as the stock of the day. Okay, let's go to the fundamental rationale. The first fundamental is always to look at the intrinsic value versus the market price. So, what's the intrinsic value of Datasonic? Let's look. That's the calculator. Okay, the enterprise value of the Sonic is 1274 billion divided by the total common shares outstanding, 2865 billion, and you get an intrinsic value of 44 cent. What is the Sonic trading now? The Sonic is trading at 50 and half cent. 50 and half cent. Okay, so you are we are paying a premium for the Sonic at the market price of 50 point and half cent. So how much are we paying in the differential? 44 cent minus 50 point sorry 0.505. So we are paying a premium of 6 cent. In terms of percentage of the premium, 6 divided by 50 divided by 0.5005. Okay, so we are paying about 12% premium on the differential between the intrinsic value of 44 cent against the market price of 50 and half cent. Okay, the second rationale we look at is actually the doubling up of the current market price to twice is how long does it take to double up. So for that we use the rule of 72. divided by operating margin of 4.21. Okay, so looks like it takes a long time. It takes 17 years for Datasonic to double up its current price of 1 ringgit. This shows that actually, this indicates that actually Datasonic has been not doing too well for the past 1 or 2 years. So now it is in recovery and it will take some time. I mean, given the circumstances, 17 years seems like a long time. But with the pickup of net profit in the ensuing coming years, I'm quite sure it will reduce the double. It will reduce the double up period. All right, uh, and it is proven by the third rationale with a PE ratio of 53. That means it takes 53 years for payback. Now, looking at Datasonic at 50 cent, it is not a price issue, it is an earning matter because price over earning equals 53. So if net profit picks up, the PE ratio will fall. It has also an enterprise value over EBITDA or the acquirer's multiple of 55. Looks like it has a previous profitability issue, but we hope Datasonic will pick up in due course with the semicon industry making a comeback. However, it is heartening to know that Datasonic still pays a dividend yield of 1.26%. It has a negative free cash flow of minus 6.3 million, but it has a net debt of 88.157 million, meaning Datasonic, despite the difficulty it faced in the few previous year, it is still a net cash company. It has quite a deep bad debt or doubtful account of 7.7 million. Okay, the new additional three rationale that I'm adding is the F score, Z score, and M score. I'll take a minute to just explain the F score actually is talking about performance delivery, whether management is good and the uh, income statement shows a good performance. Not normally the F score, anything 6 and above is considered good. So it looks like Datasonic with a score of 6 shows that for the last fiscal year, it is making a comeback. That means the performance delivery is slowly incremental. The Z score actually measures that within 2 years, if the company will go into bankruptcy, the minimum Z score should be 2.5. You can see that for Datasonic, the Z score is 15.47. So looks like it is not going to get bankrupt for any time soon. Okay, it has a very strong Z score. Excuse me. The M score, or known as the Binish score, is actually a measure to indicate if the accounts of Datasonic has been manipulated or underprovided. Uh, well, the minimum M score should be minus 2.5. It is minus 1.81. So it looks like Datasonic has been massaging its figures probably due to the 2 or 3 bad years previously. Okay. Excuse me. Okay. Now let's take a look at the chart for the technical analysis. All right. So the first or the first technical rationale that we're looking for is to see if data sonic has formed a trend. Okay, looking at the chart now, there is one higher low here and another higher low here. So it looks like data sonic has a confirmed trend. And for momentum wise, uh, this data sonic where the price action and or the price candlestick shows that it is just breaking the cloud. Okay, breaking the cloud. So it has confirmed momentum, and it is also above the MA 155 line and the MA 233 line, meaning it is indicating a bullish momentum. Okay. Uh, on the strategy, although it is above the cloud, I would have preferred Data Sonic's price candle to go above 53 cent. 53 cent. Although we can employ the momentum buy now above the cloud, I would prefer a confirmation at 53 cent for the squeeze breakout. Okay, when a squeeze breakout is confirmed, then we have a more risk managed entry strategy. So I would prefer a 53 cent buy in. Okay. Now, if we buy at 53 cent, uh, and if we set our target at the apex of Elio wave 3, at a price of 72 cents with a cut loss of 48 cents, we would achieve our target of a reward to risk ratio of 4.6 times, which is quite a handsome return. All right. So with that, uh, I would think that this is basically quite a good stock for consideration, but you have to wait until the 53 cent squeeze breakout. And the good and comforting thing is actually Data Sonic is riding on wave 3. So there is still a good range to achieve our price target. I have shared with you the 13 rationale. So you decide whether it is a good consideration to enter into a buy of this stock. Yeah, if you think that the information is good and it is a good educational thing for you, I would like to request you to like, share, and subscribe. And when you subscribe to my YouTube channel by Rationale, you get to join the TIFIC Investing Club for free. Thank you and have a good day. Bye bye.